Okay, hi everyone. Let's get started. Today is 19th of August. What a week and what a drop. I can imagine everybody is shocked and everybody is um, in some kind of pain, because this was shocker. Now, what is not shocking that it was not able to break above this resistance. If we have a quick recap, then we had this 4 hour structure where it was going down. um, we knew that this was the it was consolidating in descending manner, and this orange line was the local setup. I mean, this was the local resistance, I would say. So we were tracking this attempts, and we knew that there were rejections, then support, then again a support, rejection, and couple of supports here, and then rejection. So basically, for last 2 weeks we were expecting, sorry, we were expecting breakout about this orange line, and considering that this region, 30K region, as an immediate requirement. Um, and but but later on, after last week, there was one more attempt during the week, as you could see. So there were multiple attempts, as we can see. This line wasn't changed. The line was the guide, and these supports were also the guide. So where it this attempt was failed, it touched this one, not just touched, but actually broke, and then it couldn't recover. There was an attempt. If you look at closely, there was an attempt, but it couldn't break above this support, which became the resistance. So at this point in time, in fact, at this point in time, I realized that a new support is needed at this point, because I kind of got an idea that it is likely to make a new low. I mean, compared to this lows. So I had added this support and shared with you all. And it happened, price drop, got support for a while. So there was some bounce, as you could see, but this didn't last long. Um, and of course, we know what happened next. This was so fast and furious that there was not enough time. In fact, I was doing something else. I didn't realize that it would go down so fast. Anyway, so when I realized, then I quickly calculated and then updated you all with this support. Right. So that's the history. So what I said is, I was not surprised that it corrected. I'm surprised with the pace and the depth. That's it. But we knew that it had to break above this resistance and sit somewhere at 30K. And there was 3 stages that I had explained in last couple of calls, last couple of weeks, that this is the first milestone, 30K, where we'll say, okay, now there is no immediate risk, and that's an immediate requirement. This is the level where we'll say we would love to see over here, and this is the level where we'll say it will go for the all-time high. Unfortunately, it couldn't break above 30K, or couldn't reach to 30K, and we got this one. So that's the situation. So I mean, now I think we cannot think about what happened. We have to think about what it's trying to do, as we always do. The focus on the current setup and probable next step, right? So this is 4 hours. In 4 hours, probably we will not see much other than this consolidation, which is not bad. So this was a leg down. We can say capitulation, where it might mark the end of the consolidation for this drop. And this drop is actually very much similar to March drop. We'll see in a while. Um, but yeah, because the March drop also, where the last leg was kind of unexpected or violent one, which was like, something out of the blue. I mean, there can be now, if you think about the reasons, the thing is, reasons can be found later on. And as you know, which I always say, that price action happens first in most of the major cases, and then we come to know this is why it happened. And by the time we learn what happened, it's usually too late. So when we get a hint that there were multiple rejections like this, and this is the boundary, the best way is to put or have some protection somewhere here at a support level, and say, okay, now there were so many bounces are defend so many times it defended, how long it is going to defend. So there must be some kind of a safety mechanism somewhere here, right? And then look forward for the stability, like what we see here, where it's trying to stabilize. So that should be the planning part, in my opinion. Okay, so planning has to happen when the consolidation is in progress. Planning doesn't happen when the things are pumping, or means coin is pumping or dumping. That's too late. So for an example, this is consolidation phase. If someone has to plan, the planning has to happen now in this phase. So as you could see, this is the low, and consider this as resistance, all this. So if the smart or the experienced trader would say, this is my first milestone, as you could see, actually when it bounced, it actually got pushed back. I'm not saying rejected, because it doesn't go for the total recovery in one go, like some of the alts have done it. But BTC usually doesn't do, unless there is really some kind of a fake news, a major fake news, and then it may recover on a next day. Otherwise, there could be it takes some days to recover, because the recovery takes longer than the correction, as you know. So but when it tries to bounce, it would always try to go up to the certain resistance. As you could see, it came very close to the immediate resistance, and then it kind of pushed back. But this pushback is not somewhere here, or reached somewhere here, where we could be concerned of. Of course, this recovery is very weak in nature, or very kind of a lazy. So that's a bit something we had to watch out. I'm watching anyways. So if I see any weakness in this recovery process, so this is kind of a very sluggish kind of a recovery, very slow pace, or you may say there is no energy in this recovery. I get it, but it doesn't mean that this recovery will end up with new low. Having said that, we have to consider the boundaries, and this is the boundary. Now I have given 24,900, which is the support zone, with respect to this low and this support, right? This is the area, is the next area that has to be defended. And of course, I have given one more level at 23,700. I'm not sure why it's not. Oh, yeah, it's over here. This is the ultimate level. I tagged this as ultimate support, or last support, because if it breaks below this, then there is a serious problem in terms of recovery. And as you know, we go by the key levels, and sometimes it's so funny. I mean, there are always people who are very sensitive and critical about someone's analysis, and that's all right. I mean, nobody can expect praises all the time. So when it was 28K, um, I said 28K is nothing. I mean, it is not something one has to be worried, something like that, I said. And then what happened? That guy was so upset that basically he said whatever he had to say, and uh, basically calling that as a in his lovely style, he would basically criticize, and but those people do not understand the fact And then I had to tweet not to address him, but anyone who has lack of understanding, because I don't get angry on such people if they are very very if they're really bothering, I would mute them. And if somebody starts emailing me or something like that, which happens really bad way of trolling, and then I would block them. But usually I don't have to block a lot, but I have to mute some because it creates noise and I would love to respond to people. But then I thought maybe I'll tweet it. So that tweet is actually applicable to everyone who has lack of understanding. People think usually in a binary state, on off, good bad, good evil, something like extreme. And I always say that you don't have to take extreme steps, because if you think from a black and white picture, there's no black and white picture in reality. There are always gray shades in between. And so the tweet, what I tweeted is, I would like to repeat here because it's important for everyone, even though you know it. From my side, I would like to convey it one more, that if the price near, so it's not the best versus worst. There are no two states, but there is transition. So best, if it degrades, then becomes, let's say, good. And then if it degrades further, it's called not so good. And then if it degrades further, we will say bad. And if it degrades even further, we will say worst. So I mean, what I'm trying to say is, from the best to worst, there are different levels. And then we kind of demote or change the status to any situation, not just about trade, but in life also. We don't say I was super wealthy and now I'm beggar. There's always transition, yeah, unless somebody does something like silly, but usually there is always a transition. So in each and every aspect of their life, there is always transition. So but people try to take extreme um, view or position. And that was just a reminder from my end. So if the price at 31K, I would call it as a best price, because it was almost there to break about the last one, right? If the price comes to 28K, I would say okay, it is not the best, but it is good. So I would say good, of course, why not? And if now we have price that touched 25K range, I cannot say it's good. I say not bad. That's my expression. So not bad is doesn't mean it's bad. Not bad is means kind of a neutral, watch out level, where we cannot just ignore what is happening. We cannot close our eyes and say everything is beautiful. We cannot say that. Right. Having said that, we cannot assume that now the next is the bad state, it's going to be the worst or something like that. We cannot, because the level is not broken unless and until, because all this change in status that we have, from the best to the good to the not so bad, is based on level, is not based on our expectation, desire, or our emotions. So if we kind of think in this way, then the trading becomes very easy and understandable. So this is what I wanted to convey to people who think in extreme, levels, like bull or versus bear. It's not like that. There's no bull versus bear. As I explained, that even if there is a bull run and then there is correction, there is transition phase, from a big picture point of view, which I explained using 6 cycles. So from 15K, if the Bitcoin is started going up, you cannot say uptrend has begun at 15K or 16K or 17K even now. There, it's called recovery phase, which I called. It may not be the formal term, but this is what I believe in. And then once it breaks above 31K, 32K, which the required level, then we can say, okay, now the recovery phase is gone. Now it's entered into uptrend. So point is, during this 15K to 32K range, we are going to see consolidation and ups and down, and that's part of the game. How fast it happens, it depends on the momentum, how much money enters into the system, and so on. That is not possible to predict. But what is predictable? The support levels are predictable. But I will be honest. I want even if this support was broken, I would think that okay, now it will hold touch the critical one support. But to my surprise, it totally ignored this support and went all the way to down. It's not that this support level was not calculated by me. I had this support calculated, but I was not expecting this rapid move, so I didn't share this. The moment it touched, I shared it. So, and I had a live call day before yesterday, and I shared how I calculated, in fact, using one of my indicators, and I had demonstrated. But the point is, that is not important. The point is, um, the surprising part was the pace and the depth. But it and another point that mentioned, that there is transition even in this consolidation. And by the way, we are just talking about the consolidation, which is very local pattern. We are not even talking about the recovery wave on this 4 hours. So let me zoom out and go to that particular aspect. So we are not even talking about the wave which began in December, November, December. This one, we are not even talking about this. We are talking about this particular segment. Remember, so let me just hide all this. I'm talking about this segment. I'm not even talking about this one. We'll definitely talk about this segment. So, as I was saying, that particular in month of March, this was very similar. When I similar, mind is very tricky. Okay, mind tries to read between the lines. The moment I say this drop is similar, the mind immediately thinks that, okay, that means what Mihir wants to say is the next one is this. Probable. I'm not saying it is not possible, but this is where one has to train the mind that not to assume things. If I'm saying this is similar to March, that means it's similar to March. Not to derive anything based on what I said, because that's assumption, and there is no space for assumption in when you do analysis. What you can do is you can think about scenarios and you can give the probability. And so don't get me wrong that when I say no assumption means you cannot stick to one particular scenario and say, stick to one particular scenario and say, oh, there's some echo. Oh, yeah, there's no one particular scenario and you kind of stick to it and assume that that's what is going to happen. You can think about a couple of scenarios, both on the bear side and the bull side, and then say, okay, what is the probability of that to occur? And this is how it is. Otherwise, mind always thinks about benefits. In trading, usually the bias is always towards upside. So, but where this kind of bounce is very well possible, and but this drop is comparable to this drop where it broke the this particular trend line. As you could see, it went up, landed on this one, went up, and then landed on this one. So the bounce was expected from here, but it didn't happen. All it went down and actually hit the we had to extend this line, and then we got this pivot, right? That's what happened. However, this recovery was so fast that it didn't take time, or to even realize for some of them, and then it recovered, not just recovered, but made a new high. So this kind of drop might end up with this kind of a thing. But as I said, we have to consider this level, that once it breaks above this critical level one, which is 26,900, then we can say, okay, now you know what, this scenario is highly probable, or probable. And if it breaks above 27,825 level, right, then we can say it's highly possible, or probable, high probable. And there's nothing wrong about it, because then it will be in a good position. At this stage, we had to keep an eye, right? And of course, if this level is broken, then I think technically, then it's in trouble, a big trouble, because probably in that case, I'll just extend this one. This is like a convergence point. So it must not break this level, 23K level, basically. 23,700, but it could be a couple of hundred here and there. So this level must not be broken. Because then if it is broken, then the chance of testing this low is very high, and potentially it could go for new low in that case, right? Just from scenario point of view. So we had the best position here for breakout. Then we had good position, um, I mean, not good position in this region, and now we have not so bad position. So not so bad, it's not bad. If it breaks below this support, then we'll say it's bad. And if it breaks below last support region 23k, then we'll say this is the worst. I hope I'm able to convey it clear. So we basically, you can say this is rating, you know, 1 star rating, 2 star rating, 3 star rating, 5 star rating. This is how we do rating. I mean, we do every day in life. So a 3 star doesn't mean it's bad, correct? It's not the best, but it doesn't mean it's bad. So that's how it is. So yeah, I think that's the best way to express. I would say this is 1 star, 2 star, 3 star, 4 star, and then this is probably 5 star, something like that. Anyway, I don't want to complicate the thing, but I believe you got my message that the situation is not bad because the 24,900 level is not broken. This is very simple. And as it progresses, as and when it progresses, we can say then it moves towards the good part, and then the best part as it progresses. So consider all this prior supports are now resistance, and one can easily plan, or the position, how much to add, when to add, because these are the kind of turns. You can say, if you think this is a GPS system, these are the turns, and these turns uh, will take you to the level where everybody would love to see, right? So at different turns, one can say, okay, it took this turn, that means it's progressing fine. So all these are right turns and left turns, basically. And ultimately, when it's successfully able to do it, then we can say it is going for the destiny which everybody would love to see, right? That's how I would express. I hope this explanation will help you understand, because right now I think more than TA, stability of the mind. I'm not saying everybody's insane, don't get me wrong. What I'm saying is it's not easy to keep the calm. It's not easy to stick to the principles or rules. So I am just someone who is reminding that emotions are going to play a role in this kind of situation. To be honest, I used to be in the same boat a couple of years ago. Even I'm trade I mean, because I was into stock market, I was not into crypto. I mean, not as a intense player. I started in 2015, but not like a day trader or some frequent trader or who would see the chart every day. So I started in 2015, studying the crypto from a technology point of view. So I have seen the cycle, so I'm aware of the nature. I'm aware of the volatility and price action, so that I'm aware. But point is, that is one thing, and being in the game and doing this is a different thing. That's what I'm saying, that even until 2020, I would not able to handle certain situation. But at this stage, I learned that TA is not enough. You need that kind of mindset to win this game. And so that's why I keep on emphasizing on emotional aspect, because TA plus state of your mind actually increase the probability of winning. That's my that has been my consistent message on this platform whenever I get a chance, because this is not easy situation, but I'm trying to justify that this situation is not bad using my TA. This is my attempt to explain that, okay, this was very nasty drop, but where it stopped, where it stands, that matters. Okay. As you know, if this is a mountain and somebody assume that this price is climber climber, right? And then the climber sometimes may drop from the position, but he or she would have some kind of harness, some safety net. And then that safety net or that support basically would help that person to continue. Yes, that person would, the climber would lose that gain, the hike, right? But it doesn't mean his or her journey, in the climbing is over. That's just another analogy, because I'm trying to throw some examples or analogy to make it understand what we do in our daily life. It's not, this is very similar in trading, that this price is a person who climbed and then kind of dropped, and then climb and then drop and then trying to climb and then so you can say this is heavy resistance. The mountain is very steep, and so it's giving hard time. So sometime, in a worst case scenario, that person has tried, maybe try again, and then possible that he or she cannot cross this peak because it's humanly impossible today. So similarly, right now, we know that this is a heavy resistance zone, and I had explained actually a week or 2 weeks ago why it is very heavy resistance zone, because that was the main support for prior bull run. We'll have a quick look on a weekly chart again to remind you why this 31K range was super strong. Okay. But now on one day, you can clearly see that this depth is pretty deep. I mean, we would love to see it stopping here, but it is here. And then what I did last night, this particular orange line that you see, it was up to this one because this was the breakout level for this one. I then just extended and I got this point. You won't believe this is like, and then I said, okay, it makes sense because this is more like a breakout and a worst uh, reset or worst throwback. You know what is throwback? Throwback is when, if there is a breakout on the upside, let's say, then it would come down and touches the breakout line. The breakout line can be horizontal or at angle, depends on the pattern. So if this is the, let's say, breakout, sometimes it touches, tuck, and then goes up. So that's called throwback, means it comes back to the breakout boundary, not the same price, but the boundary. The boundary could be at angle or horizontal. But so if this is the breakout level with respect to this boundary, which is at angle, not horizontal, then we can say this is a whole round trip it made and touched back. So this is the worst throwback. You can say that in a way, right? Uh, this is also a bad throwback, bad one actually. From example, if this was the boundary, let me explain this. This is, let's make sense out of this. I would like to extend this support on the left-hand side. So what we see here is this was the rejection and then a very bad drop, but you see the support and then breakout. You see, while it was recovering, it had a hard time. If you notice, there was a breakout but not able to close above, false breakout, and then but it didn't lose much and then broke. So point is, this was the boundary, breakout boundary, and we can say that this was the breakout boundary for this structure, and then there was a big throwback round trip, you see, and touched this one, and this was another attempt and another throwback to the same one. So this actually coincides with this breakout line and also coincides with the prior breakout line. This is a convergence. It's just a coincidence, but it's beautiful to see as a TA, as a technician, that this kind of behavior is observed. I hope you would love to see this kind of technical part. I mean, those who are interested in TA probably appreciate what I'm saying. Um, so this is technical explanation about the behavior, right? Why it stopped here from a technical point of view, why this is so important and strong one. And then of course this is more low, one more conservative level, and we don't want to say beyond this because it's not there, right? But we have to always cover a scenario which I always mention. Even if we are, let's say, 60% thinking on the upside probability wise, we always have to think about what is 40% probability on the downside. We have to talk about it, and I always talk about both the sides. The probability of upside move is still higher than 50%, right? It's still 60%, a little higher than 50%. So of course, my inclination is definitely on the upside for now, right? Because the support is not broken, and then it would change if it breaks below. It's right now we don't have to talk. So if during the week, if something bad happens, I'm going to update you. And anyway, you have the levels, so you can also put the alert. So you don't have to be you don't need to wait for my update, because sometimes this can happen, while I'm asleep. For example, this is 24/7 market, you never know. So I would suggest that you put alerts on these levels, and that will make sure that you would come to know immediately. Because even if I update, I'm not going to update any differently, but I'm going to update in terms of explanation. But as far as planning is concerned, execution is concerned, you don't need my input because I'm giving you right away. So I hope you understood what happened. You had idea that what level was required, so there is no ambiguity, or there is no I would say confusion in terms of what was needed, right? We know what was needed and it was not achieved, of course, and now we are here, right? And I think we have to wait and watch, as I mentioned, and see how it recovers. And these are the levels. And feel free to ask me, as I said, and try not to assume things. This is my strong message to everyone. Even if you're experienced, sometimes you situation can control people. It's not easy. So feel free to talk. I mean, I'm happy to answer any question you might have, any queries that you might have. So feel free to ask me, right? And again, we are not someone who are strong on one side. I mean, I am level driven person, right? So if you say something bad, I will not say you are a bad person. But if you are consistently bad, right, then I would change my state. Because so similarly, if price drops from the best level, we cannot say it's worst. So you can give so many examples from real life. I'm just throwing few examples because sometimes one example sticks to someone, another example sticks to some other person. So everybody would appreciate different analogy or examples based on his or her real life. So that's what I'm trying. But the message is very simple. It doesn't change from the worst to the, I mean, best to the worst. And this, so we have to watch these levels, and we have to change our stand. We have to, I believe that, plan the risk. And one more thing, that when it is falling and when it is stabilizing, it is okay to be conservative. Not financial advice, but it is okay to be conservative. Some people get overexcited and say, okay, let me go all in something. No, I mean, there is no need to hurry, because if this asset is going to uh, go for a very high level, let's say, and going to recover from here and go for new all time, then whether you buy at 26K level or 29K level, it doesn't make any difference, to be honest. Okay. uh, and some of you must have realized as well. So the best practices, ramp up, ramp down is the best practices. If you look at my alert, I had alerted and added this required level when it touched this resistance, because I knew that this is must to break. I mean, must to have kind of a level. This need to watch out until it breaks above. This message was given not today, but in month of July. And it is sometimes we ignore. And I'm not saying watch out means a threat. Watch out simply means we have to be uh, some conservative sometimes, and not to assume that it's going for all time. So I haven't removed this particular label since July. But if someone ignores this totally, I cannot help, right? My job is to interpret the situation and trying to depict the true picture, which is close to the reality, interpretation point of view. Nobody knows the future, but once you understand the current state, it is as good as knowing the future. When one is very you have to be accurate with your and accurate and honest, because even if you find out sometimes people are not honest with oneself, and try to ignore, so for an example, if somebody has bad habit, you see, that person knows that it's a bad habit, but person is not able to quit that habit, so person is not honest and continue, repeating that mistakes. Even that person is smart and intelligent, so knowing is not enough. um, Implementing is required. So knowing that this message is there but not doing anything is not something good, right? So if somebody assume that there is all-time high at this level from here, then it's a mistake. Definitely it's a mistake, but I'm not saying mistake in a that it's the person is going to lose everything. What I mean is that person has assumed without the without seeing that happening. So this tiny label had a significance, and then interim updates like this level had significance. This stages had significance, and I'm going to emphasize it again, that all these levels have significance, and these are like stepping stones, or people could simply use this. Because sometimes what happens, the people realize when the levels are extreme. I'm telling you, people don't do apply risk management at levels, at interim levels. So for an example, this was the peak I had highlighted, this is the resistance. I'm not saying someone has to sell everything, but when there are supports, if this is broken, if this is broken, if this is broken, and this is broken, and something like that. So nothing has happened overnight. Everybody had 6 weeks of time. So, and I'm not saying that something bad is going to happen, as I mentioned. But the point is, things change slowly. Even this drop was fast. Actually speaking, the correction started from here in month of July. So you can say that for last 5 weeks, it is in correction. Only the speed was so much that people are shocked. But if you look at this way, the correction started, and there were levels, one level, second level, third level, and fourth level. So these were levels where people could have decided what to do. Right? So I'm not saying somebody has to sell it. Don't assume what I'm trying to say. Uh, I'm simply saying that there were 6 weeks, and there are levels given, and one could try to manage risk slowly and incremental manner. Similarly, when one has to add, not then assuming that adding everything here is also a mistake. Like selling everything is also a mistake in my point of view, because it's an extreme decision. And buying everything here is also a mistake in my point of view. The way I would explain, somebody could ramp down, and similarly somebody could ramp up. on these levels. This is the right way, or I would say more pragmatic way, from my experience. This is not financial advice, but when somebody does this kind of planning, I would say that that person is never in shock, because that the person would be, if the person is reducing, that person would have cash in hand, and that person would have buying power at a lower level when required, and so on. And in worst case, if it continues to go down, that person would not think, hey, I should have sold at 31K. There is no regret. And most of the people regret. So many people I have seen, they said, oh, I should have book profit when the Bitcoin was 60K. It is not going to happen. You cannot figure out that 60K, 65K was the all-time high, was the you cannot figure out at that time. But when it breaks below 55K, 50K, then you realize that it's melting down and breaking support, and that's why one can book profit and so on, right? So point I'm trying to convey is, buying is not about one transaction, selling is not about one transaction. It's a good idea to do that in incremental manner. Start with 5-10%, then 20%, 25%, 50%, maybe 2 trade, 3 trade, 4 trade. This is how one has to spread. There is no shock and surprise when someone plans like this. Up to you, right? I have stated this many times, but sometimes I repeat when the situation is critical. Why not? Yeah, so, but yeah, sometimes everybody has their own style. So I'm nowhere trying to change this style, but I would share what I believe in. Anyway, so this is one day, and yeah, I covered. I had to recap some best practices because the time demands. Now we'll go for the weekly and see what weekly shows up. I have not removed this one, as I said, because this scenario is, remember, this is thinner line. So this scenario could happen. The big picture, we cannot forget. This is a one leg down. This is an attempt. There can be another leg down. I'm not exaggerating here. People are talking about 10K. I don't believe in it. Okay, it could be 6K or 7K if this happens. And I have no problem, because I'm not someone who is going to hold my position and see. So I don't I if certain levels are broken, so whatever I explained, remember, whatever I explain at very local level on this structure point of view. Remember, this whatever I explained, these are the levels for managing risk. Now we are talking at a higher level. But so in this case, the price and the boundaries are different, because this is a weekly chart, remember, but the approach or the method doesn't change. In this method, you're going to see these ranges are wider because it's higher range. And so we were talking about this wave, or particular this wave. When we look at weekly, we have to zoom out. We zoom out, like, so if this is a street view, if this is a city state view, and this is more like a earth view, a big picture, or country level. The earth view is the cycle level, let's say, where we study a whole entire 4 cycles, which we had done in past. So if we are zooming out, what structure we are tracking is this structure, a leg down and a recovery phase. And as I explained, this is super strong level, because supported, and then broke down. So now trying to break above, you see. So if it is making really hard attempts here, and this was rejection, this is another rejection, so now it is here. I would not change this path unless it breaks below our green zone. I cannot keep this green arrow if it breaks below green zone. No way. I cannot. I had to stick to my rule, right? So as you could see, now the levels are different. If you're wondering why levels are different, because this is weekly. And I would like to remind one more time that everybody has to decide what level, what time frame you are tracking. If you're someone who is tracking below, 1 week, then whatever I said before, that chart to be referred. If you're tracking at a higher level, like weekly or higher even, then this chart or layout matters, where you see the key levels here, because the view is different, tolerance is different. So there should not be any confusion why levels are different. Supports levels are going to be different here and on that layout, because the time frame is different. So you had to decide what time frame you're tracking. Okay, so now it's here. This is definitely edge case, right? This is the best case where it is almost there to break above, but then it is dragging, and now it's here. So naturally, this is so important, right? So we had to wait and watch for it to see. So this particular path doesn't change. It delayed, but I'm not going to remove it. It is darker and solid line. This is still dotted, but what? You know what? If this is broken, then I have to change this. I have to remove this and then draw something else, right? So now, as you could see, these boxes need to be widened because there's more delay. Now, this one thing we have to observe and cannot ignore is this particular immediate trend line is broken with this one. So there is little negativity, and that's this kind of a negativity is actually this is one of the way, as you know, one of the ways, not the ultimate ways, but we cannot ignore this, that when it started here, it touched this one, it touched here, it touched here, and this broke down. So we cannot ignore it. So we are not ignorant of what is happening. That's why I said we have to watch out even closely. We had to watch out right from the beginning, which I mentioned in my alert. But now it is more important, right? So I hope. So if but this trend line is just one of the factors, not everything. But if it is broken, I think we had to note that it's broken. So this is not the best situation at this moment, right? So as you could see, we are not taking any extreme position, but we are trying to be practical here with and trying to track the key levels. And I think, yeah, I think we have to slow down in my point of view. And when I say slow down, means calmly observe how the next week unfolds. What is good part? I'm going towards another good part. But that good part comes from the stock market, and there are a mix of actually data point which I'm going to highlight, which is very important. Now so this is Bitcoin. I hope everybody is clear on Bitcoin price chart. I will move towards dollar index. So the dollar index has reached to the resistance. Now this is a decision point, whether it goes down, which I'm right now taking side on the downside. But the moment it closes above the orange line, especially if it breaks above 105, especially, then I think we have to draw upside arrow. And if that happens, then Bitcoin will feel the pressure even further, without any doubt. In fact, Bitcoin was facing pressure because of last 5 weeks of, um, you know, consistent bounce. You see, this recovery from DXY is no ordinary, and market is expecting another rate hike from the Fed. That's why it is happening. We have seen this impact on stocks as well, right? Which were like stronger than BTC earlier, before August. but even stocks were under pressure because of this section. So, from a macroeconomic factor point of view, the inflation is sticky, the core inflation is sticky, the overall inflation is coming down, but the core inflation is sticky, and the Fed looks for the core inflation, excluding energy. And yeah, so if the Fed or the central bank doesn't stop raising interest, the pressure will remain high on the equity and the crypto. Halving is BS. Price, I have explained and I shared the chart. I'm not going to argue with anyone who think that Bitcoin halving triggers bull run. I have explained it. No halving in the past triggered bull run. All halving, Bitcoin halving, were in middle of the bull run. You can clearly see that on chart. So you will hear so many theories, especially the halving theory is BS in my point of view. It has no logical reason. I mean, it's intuitive that supply is going to be lower. It's intuitive, but it is not triggering any bull run. Halving happened during the bull run. You can see that in on chart. I don't know why people say that. Anyways, so halving is coming. With the LTC halving is also coming. What LTC is pumping? No, LTC is not pumping. BTC halving is coming. So point is, so far I have not seen halving. So your point is you're going to hear so many theories. To me, all these theories either wrong or do not have so value. Only thing matters is interest rate. If you really want to know the cycle, especially in since 2017-18, then it's about interest rates. Before 2017-18, everything was speculative. The participation were very limited. There was no CME futures. Once the Bitcoin was listed in CME on CME futures, everything tied up to Wall Street. And when things are tied up to Wall Street and when the big players start entering, it is about credit money that goes into system in a big way. And when the credit money drives the price, which I mentioned in last session, when the sailor buys Bitcoin, he is not buying from cash. He is buying from credit money. Simple. And when the credit gets expensive, that buying power reduces. Not just that, if credit continues to get increased, which we have seen from near zero interest rate to now 5%, 6%, so that's a continuous increase in interest rate. The buying power is not going to be the same. You know that impact on housing, that people are still buying, that's a different thing, but you can see the effect of it because the mortgage rate are near 5%, 6% or higher in some countries. But from it's not easy. So point is, when the interest rate goes up, the credit becomes expensive, as we know. And all this money that actually pump this asset, especially crypto, not just crypto, but even stock market is driven by credit money. Most of, because the money itself has, the credit has a significant part in the overall money supply. Each time you swipe your credit card, you create money, actually speaking. You think that you are using your cash because you're repaying. That's not true. The moment you swipe your card, you are actually creating. So you think that the Fed is printing money? Yes, they are printing money, but we are all printing money when we swipe because we are demanding credit, even for small matter. So I believe we should not be swiping card. If we really believe that credit should be contained, we should use the debit card. but people use credit card because everybody loves, travel point or, benefits, and they want to pay later. So we are part of the system, we are contributing to the credit. No, we should not blame just central banks. I think people are so biased that they don't take share of their action. I mean, they don't take responsibility of their action. Whenever we apply for credit, whether small transaction like $2 or or credit for house, we are actually creating credit money. So everybody is responsible. Anyways, the point is, DXY is going up because the dollar is increasing. Another these days, the dollarization, which is another BS. Anyway, that's a very different topic, so I'm not going to go into that. But dollar is getting stronger. People are not realizing. People think that the US is sinking, the economy is sinking. They're totally wrong. US economy is one of the strongest economy in the world. US economy is not going down in terms of relative comparison. I'm not saying that the in a from a GDP to debt ratio point of view, it's going down. The ratio is, in balance. People are earning lesser. That's true. I'm trying to compare the markets. I'm not comparing with the dollar with respect to dollar, let's say 20 years ago or 30 years ago. I'm not saying that. Everything is devaluating. There's no doubt about it. But when you compare one economy to another, um, and many people think that the dollar is sinking, dollar will not have value, and so on. I'm commenting on that part, that they are wrong. The dollar is not sinking. In fact, so many countries, whether you take Turkey or South American economy, and even China is slowing down. A very handful of countries in Asia are actually doing well, without naming any countries. But the point is, EU is under pressure. There's no growth story currently. It might be, and like it may happen, but not in current. So the US economy is still doing well in relative terms. So point is, dollar is getting stronger, and that's a reality. And again, we go by the level. So I would like to say 105 is the level which I would like to watch out. This is the critical level, and if this is broken above, then I think critical resistance, I would say. If this is broken, then we have a problem, unfortunately. But again, not to assume anything. Assumption has no place. It has to break above. But no information is needed. So I would draw a green arrow, but remember, I would not draw a green arrow from here, but above this, like this. It has to break above this, then only this arrow is applicable. Until then, I would say that this red arrow is applicable. Okay, and this is like more like decision zone. This particular zone is a decision where it has to decide what to do. Okay, so this is DXY, very important reference data. We'll look at NASDAQ. The NASDAQ was correcting last, and on Friday it started bouncing. As you can see, the bounce is not enough, but it was good attempt. It indicated that, okay, it found this support. So I think the next week is important, where we'll see how how hard it tries to recover. If it recovers from here, we will see good news all around, and I think that will be positive message for crypto market as well. So future will start indicating Sunday evening. and Monday, but when the spot market opens, we'll have more clarity. So yeah, we'll have to. So next week is super important because this last 3 weeks going through correction. But as you see, this correction is tiny. It happened here as well, so this is not a big deal. Another macro factor other than interest rate is China. So these are the only two major macro factors that I learned. I'm not an expert in macroeconomic, but whatever I know, whatever I studied, I would like to share. So interest rate and the China factor are the main two drivers in the present days. China is important because China is the manufacturing hub, still a big one, and not just manufacturing hub, but a big consumer of the stuff. If the China stop consuming Apple is going to go down. As you know, the revenue comes from China, a major one, and so on. So China not just exporting a lot, it's consuming a lot too. It consumes commodities, oil, gas, and other metals like other commodities. So that what happens because everything is related. When you have to export, you have to consume as well, not just for domestic, but for exporting also you have to consume a lot. So, but the real estate is in trouble at this moment. But China has a lot of liquidity, in my opinion. Based on what I learned, they can pump a lot of USD. They have a lot of USD and a lot of reserve they can pump. And another thing is they are not following any global guidelines where they have to declare certain data. They can do something secretly and not required to tell the world because they're not obliged. So government, that they are in fast pace. I don't think China will see their economy suffering. They'll do whatever needed, in my opinion. So there are always phases where there can be slowdown, but I don't think that China will go down. I don't think so. But what is happening is that there is a war intensified between the West and China for all reasons. I don't want to get into that. It's because it's political, and when it comes political, there can be some major difference in opinion. So I would just focus on the important part, which is related to our platform, I mean scope, because it, trade war is not good, uh, because that makes sudden changes. As you see, the trend has changing. More and more countries are now moving away from China. So the China is actually losing business, in other words, but China is making another alliances, but those alliances are weak. Like they are approaching African nations, South African, and so many places they want to, because they cannot stop their exporting. But you know that the if the West stops buying from China or reduces from China, then it's going to impact, and that impact is being realized. Not just COVID. COVID impact happened, but now the new impact is due to with the West is reducing dependence in China. You cannot close the shop or factories all overnight. So, but we can see more and more companies are distributing their manufacturing hub other than China, and basically China is losing business, and that's why China is slowing down. And when China slows down, other places are expensive. uh, but why companies are doing? Because of the tension between the West and China. So the political reason, Taiwan, and other factors. So anyway, so the point is, the things are going to get more expensive. So the China is important because China could offer us cheaper goods, and if other part of the world is expensive, then things in our home in the West, things are going to get expensive. And when that happens, that increases inflation. When inflation happens, I mean increases, then the central bank get aggressive. When the central bank gets aggressive, interest rate goes up, then the dollar index goes up, or basically in that case, the basically credit goes up. I mean, credit um, interest rate goes up means credit gets expensive, and when the credit gets expensive, asset faces problems. I mean, pressure. So you see that China factor is not isolated factor. There is a chain, and this is my interpretation. This is what I meant. That is, I'm trying to interpret how different macroeconomic factors are related to our crypto. So anything that happens in crypto within, whether it's SEC does something, or those are very short term. As you could see, XRP pump, we are going to see in the next session, and then that pump is over because that factor is no longer a factor. But it doesn't mean XRP is over, the pump is over. Don't misinterpret. And we are going to see in the next session like that. So my point is crypto related factors are short lived. They are not for, they are not trend makers. This is important message. Crypto related factors are not trend makers. The macroeconomic factors are trend makers. Halving of Bitcoin is not trend maker. Okay, but what Mr. Powell does is a trend maker. If there is a war, intensified war, that's trend maker. If there is COVID like pandemic or major global issue, that's a war, some kind of war, that's trend maker. Even whatever, 6 month, 1 year, 2 year, but those kind of major factors affects the trend or changes or reverses the trend, right? Depends on the severity. But one thing I can tell you for sure, that the crypto related fundamentals are not strong, and there is a reason. They will be a trend maker when they will be a utility in a true sense. When you and me will actually use crypto not on exchanges but in the real world, not just few transactions, but in like the way we use our fiat currency, then the individual stock, it will behave like individual stock, and then it will behave like it will have its own trend. Right now crypto do not have trend. Individual crypto, it's everything like Bitcoin. Whatever Bitcoin does, everybody follows in terms of trend. So that's how it is. So everything is speculative, and that's why anything that is happening in crypto is not trend maker. They'll briefly change the price up or down, depends on the event, but they are not changing the trend at all. If Elon sells Bitcoin, who cares? It doesn't change the trend. If Sailor buys Bitcoin, who cares? It doesn't change the trend. They do not change the trend. As simple as that. They could boost in the direction where the price is going on, depends on positive, negative news, but it doesn't change the trend. I have this firm understanding based on the data. Okay, so I think this is, let's look at the bond yields. The bond yields are near breakout, but remember, this breakout could becomes point of rejection. So we have to see that. And I think it is going to hold this level, I believe, until the Fed decides what next. So we can draw this heavy resistance zone like this and say we'll have to wait and watch for this to see. So this is heavy resistance zone. And then, so I think we can remove this interim levels for clarity, because those we were tracking, we have this green arrow. See this green arrow, it worked, right? Perfect. Look at this. And then this, it was not visible, but I'll just highlight. I didn't add it. It was there. It's perfect. Up, down. So this has happened. So I would like to remove it now because we already covered that part. I can remove this also. Okay. I think the support, this is important. I'll keep it. And this is resistance. So we have now very clear cut setup, where if it closes above this and continues, then it's not good, not good, because this is indicative. This is coupled with the funds, federal funds rate. And we know that that's not good. If and right now it's in a strong position for sure. Like BTC is near support and this is near resistance. But remember, they can flip. So we have to wait and watch. And there can be some gap. It's not that light switch. You turn on the light and turn on the switch and the light turns on. Sometimes there can be time delay. But yeah, understanding this is important because this is direct reflection of what central banks are doing. Bitcoin dominance is important to understand the crypto world. It had hit the resistance means alts are getting stronger, which is very, very good news because I don't like that only Bitcoin rules the game, to be honest. You may say, okay, I'm biased. Yes, fine, because it doesn't make sense that if there are so many children, good children in a family, and only one child get all the privilege, nobody likes it, right? So I would say I'm not biased towards anything, but I'm biased when it comes to Bitcoin versus alt. And I'll say Bitcoin, I would not wish for Bitcoin or BTC to go down like zero. People say I didn't mean that. What I mean is there are good smart contract platforms and coins. I think they should get their fair share. That's what I believe in. So I don't like Bitcoin at 50% market share. First of all, Bitcoin has nothing to offer to anyone which is applicable in real world, right? There is no scalability. It's not usable. Lightning Network is total failure so far. It is not in the mainstream. Whenever it comes, well and good, we'll welcome it. But so many other platforms which are being used, like say NFT platform, people are spending their fiat money to buy NFT, which is real use case. They're spending money for the games. Who is playing games on Bitcoin? Nobody. Who is buying NFT on Bitcoin? Nobody. Who is doing commerce on Bitcoin? Nobody. El Salvador is a total failure case. Nobody is using Lightning Network there. Maybe small piece because they had to showcase. So point is, I am not in a favor of Bitcoin having 50% share, which I'm not afraid to say. I would like Bitcoin to have 20%, 30%, and probably depends on its value in terms of usage. I don't consider that it should have privilege. It's not it should not be a favorite child because it was created by Satoshi. Satoshi is not around, right? It's about, and the first version is always not the last version, right? So it doesn't mean this was because this was the pioneer, because iPhone was, or Apple was not the pioneer of the phone, remember, right? Tesla is not the pioneer of the car, remember, maybe for electric car, but not as a vehicle, as a class, right? You and basically, if the Ford was the initiator, let's say, it doesn't mean you should buy Ford because it was one of the first ones. No, that doesn't tell you. You have to be competitive. You have to make something which is competitive, usable. So Bitcoin being the first one doesn't qualify that Bitcoin is the greatest and the greatest coin. No, it has to be usable. So that's my personal bias. You can say that. And I have my reasons, which I mentioned. So I would like to see Bitcoin dominance going down below 30%. And eventually it should settle to where it is supposed to based on utility. I would like other platforms to flourish and get money. Now, it's not about my portfolio. It's not because of that, because but I would say uh, they are really doing something good. So why not? Another thing I would always highlight that pay attention in January 2024 when the COPA case, you can research, you can read about it. I have mentioned earlier also, watch out BSV. Watch out BSV. I'm not promoting BSV, just clarify. I'm saying watch out. I'm not trying to say BSV. I'm not saying Craig is the Satoshi, but I would say don't ignore him. There's a difference between saying supporting him and saying don't ignore him, not to ignore. And I'm not saying Lightning Network to be ignored. I'm not saying that. I'm just stating the fact that Lightning Network is not widely used. When it is widely used, accepted, that will boost Bitcoin. If Bitcoin comes up with smart contract, then it will be amazing, because then if they are able to do the scale, because they have security, community support, lots of money, they don't have scalability, and things do not fly without scalability. Like, so I'm not biased towards any platform. What I'm trying to simply say that do not ignore coin. Like people were ignoring XRP, do not ignore XRP. Do not ignore BSV. Okay. And do not think that BTC is kind of a godfather. Okay. Or it should not be a favorite child. Not blindly. So don't blindly go with something. Just keep your eyes open, and just see who is making progress towards the real utility. The winner is the one who will provide the real utility, real commerce. Okay, so that's my strong message and bias. So it doesn't mean any particular coin, but I have to highlight BSV and XRP because they are ignored. That's why. It's not they're my favorite, not at all. Anyway, uh, I think that's in it. That's it from part one point of view. We'll quickly look into part two. Thanks everyone. Feel free to ask me, as I said. I'll